Rest of you, what do you think? Is Company A subject to tax in Malaysia? Company A is in US. Company A sells their goods to Malaysia, courier over the goods. Are they subject to Malaysian tax? What do you think? Mecca? Rakin? What do you think? Yes or no? What's your analysis here, guys? How? Okay, so the answer is no. Does that make sense? That's why you have a lot of people selling in Lazada from China. Do you think they're paying Malaysian tax? Nope. They are not paying any Malaysian tax. They are a company from China. They sell in China from China and they deliver by courier to Malaysia. Their income is earned through Lazada. They could have registered in Lazada China or something like that. This selected Malaysia as a country and started posting in Malaysia. People selling in eBay, they could be selling from anywhere. So the location where you are will determine where you are being taxed. Now, in this case, unless the company in US has established a permanent establishment in Malaysia, there is no tax. They just get their money and they pay their US tax only. Are you okay in this part? However, where would it claim double tax? In Malaysia or in US? Type your answer in. Let's say it had a permanent establishment in Malaysia. Therefore, it's going to pay Malaysian tax. So, question. Where would you claim the double tax relief? Are you going to claim in US or are you going to claim in Malaysia? Type your answer. Malaysia. US. One more person. US. Correct. Why? Because you're a US resident company. Are you okay in this part? So you claim the tax relief in US because you are US tax resident. You get the logic now? So the same applies if you are doing Malaysian variation. Malaysian company selling in US pay tax in Malaysia, don't pay tax in US unless they have a permanent establishment in US. Then they get tax in US also. When they get tax in US, they get tax in Malaysia, they got double tax. When they have double tax, you go like, okay, where are you resident? That's where you claim your relief. Okay, are you clear on the sequence of analysis here? Can Okay, good. So now comes to this question. Do we have a permanent establishment? So here, a Malaysian export company has, okay, this is a very important idea, has representative based in Singapore who regularly take instruction from Malaysia, report to Malaysia, and who enter sales contract on behalf of Malaysian company. The representative render these services exclusively to the Malaysian company only. That means they do not serve anybody else. So, based on this, okay, let's look at this. There is a Singapore sales rep. Okay, this representative render their services exclusively to Malaysian company and remunerated by Malaysian company also. So in this case, is there a permanent establishment? The answer is fulfill sales using inventory in hand, entering into contracts for the Malaysian company. Okay, two part. This actions appear to meet the agency requirement of permanent establishment. Does that make sense? This is further indicated by the fact that rep is exclusively working for Malaysian company, and also rep is being paid only by the Malaysian company. Okay, that is the first part. So we're kind of saying like, yeah, there is the agency requirement has been met because this person looks like behaving like an agent for the Malaysian company. Are we okay? Right, let's look at the next question. Right, a German company has secured a project to install. Okay, well, it's a project to install. It's an installation project for 50 wind turbines in Malaysia within a 5-month period. Okay, so the German company well, it's a wind turbine installation work. Does that make sense? Well, the time frame doesn't meet the requirement. So based on this, So the German company does not have a permanent establishment in Malaysia. Got it? Clear on this part. Okay, so that covers this idea that you're supposed to be aware of. Just be aware of that. Hold on 1 second. Okay. 1 second. Right, can you hear me a bit better now? Is it a bit more better? Or is it the same quality? Better a bit, right? Same, okay, never mind. Let's move on. So back to this, the next case study that you have is going to be about Singapore Investment Dealing Company. So you have a Singapore Investment Dealing Company. Regularly buy and sell shares on Bursa. All transactions are carried out by a stockbroker operating in Kuala Lumpur based on instruction received from Singapore company. So, is this going to be a permanent establishment? Okay, now, this is about the Singapore Malaysian broker buy and sell, correct? They are buying and selling. Okay, so it's a Singapore company we're looking at. So they are using a Malaysian broker to buy and sell. Agency. So there's no sales being fulfilled by entry and so on. Plus, well, there are no specific identifiers. Right. Are we okay in this part? This is not a permanent establishment. Right, that would be referring to the idea of, remember, that would be referring to the idea of making sure that only those agents that are specifically working for the company are considered a permanent establishment, whereas those working generally are not considered a permanent establishment. Right, let's move on. Next part. A German company secured a contract to supply 500 wind turbines off the east of coast of Peninsula Malaysia. The installation is expected to take up 24 months. Contract comprises the supply of 500 wind turbines constructed, fabricated in Germany at a cost of 500 million, and installation cost 200 million. So you got how much here? 500 wind turbines cost 500 million, installation cost 200 million, and it's going to take 24 months. Another German company here. So when we look at this one, installation activity falls within the activity test parameter for installation activity is for more than the whole project will be classified as a what? Permanent establishment. Does that make sense? Tax will be charged on income earned. No tax. No tax charge on the 500 million related to the manufacture of the foreign wind turbines. Okay. Pay RM 48 million. Companies have to pay tax on Malaysian income tax. Right, that's basically the idea involved there. Got it? Right, let's go on to the next part. This one's under section 107A. Clear? Any questions there? All clear? Let's go on. Right, we're now coming to this idea called withholding tax. One of the most dangerous aspect of the business. Why is this a dangerous aspect? If they don't meet it, the income tax can turn around and say like you don't get to deduct all your expenses. You know, you have to deduct it following year or something like that. So withholding tax. Contract payment for services done by non-resident using permanent establishment. Okay, that's the first one. Contract payment for services done by non-resident using permanent establishment. That's the one I wrote down earlier on. Yes or not? So if you make any payment, contract payment to a non-resident but who has a permanent establishment, then you withhold 10% for normal tax and 3% for employee tax. Two things you have to withhold. Okay. Section 109, interest or royalty from Malaysia from non-resident provider. Okay, non-resident provider. If you have interest or royalty paid, non-resident, you withhold 15% for interest and 10% for royalty. Now this is the general rate. Remember, this is the general rates. And just as a quick idea for you, just a quick one. Give me a second, I just get this document for you so that you can see something about this. Now, if you were to look at the rates provided by the Malaysian exam, you do have there. Your examiner already give you the rates. Are you okay? So no need to memorize, and you already know what is the withholding tax requirement. So she already say, other income, section 4F, 10%. Rent and movable property, rent of movable property, 10%. Fee for service, advice, assistant, 10%. Service under contract, 10 plus 3%, which is the one I just talked about now, the 10 plus 3. And we did a calculation to support it, the 10 plus 3 here. Got it? That you're supposed to withhold how much? 10 plus 3 withholding tax. Follow? That's the withholding tax, and that's related to this part. Then you got a royalty 10%, interest 15%. Okay, are you okay on this part? Can? Okay. So those are the rates. Do you need to memorize them? Not. Since given already, I don't think it's a very big issue to memorize. Your examiner has been a bit more kinder recently because this thing was not given in the past. It's recently been added into the exam paper. The exam paper now carries this item. In the past, it doesn't. Okay, just remember. So all taxes can be reduced by double tax agreement between countries. However, a discussion point and practical aspect the above only, not examined. So remember, the examiner can ask you about it, but you don't need to worry about it. Section 110 is available for those tax under Section 107. Okay, what is Section 110? I do have to tell you this one. This one is example. It's like this. Right, let's say that's the Malaysian tax on the income. It has a profit of 700,000. Not, it'd be 24%. 24%, why? We're using the Are we okay in this part? We're using the non-resident company rate. The non-resident company rate is there. Non-resident company is 24%. Individual is 30%. Follow? Can? There's only a single rate there. And then all trust body, all 24%. Okay, right. So we already have that number there. You got a 24% tax rate. The revenue for the contract, let's say, buyer has to hold 260,000. Does that make sense? Clear? Buyer pays the non-resident company. That amount of money. Now, here's the section 110 or section 110 set off. So here you're going to pay 174,000 minus needs to pay back okay. That's section 110 kind. Whatever tax, hold on, how much is the tax here? Sorry, 168. 168. So it's about 92,000 LHDN needs to pay back or credit to the taxpayer. Does that make sense? This is section 110. This act here. Can you see this act here? That's section 110. Clear? Tax to pay. Withholding back tax to claim. What can you claim? Okay, 260,000 is what you can claim. All right. So that's basically the two things you have to do when you're calculating this part. Okay, let's move on to the next issue. Now, the next issue we're going to look at is called, well, another company signed an agreement with a non-resident company for technical report. Staff came for 8 days in Malaysia out of 40 days taken to report. Total fee paid is 28,000. Okay, now when you have this case, how do you deal with the withholding tax? How do you deal with the withholding tax? Well, if you came for 28 days only, Non-resident, right. Well, the company is non-resident and only some work. So the company is non-resident and some work was done. Okay. Portion of work right. How much is it going to be? 8 days out of 40. Okay, right. So it's 8 over 40 times 28,000. Now the 5,006 is subject to Malaysian withholding tax at 10%. Are you okay in this part? RM 560. Okay, are you okay on this part? Clear? Not clear. Can? Follow? This one, provision or technical report, fall under which category? This one fall under section 109B. Okay, that covers this part. Are we okay this part? Any questions there? Clear? Can I move on? Okay. A non-resident company has been charged income of 300,000 and service portion of the contract is 1 million. The chargeable income of 300,000 and service contract is 1 million, which the client has withheld 13%. Discuss the treatment of the tax withheld. So what do you do with the tax withheld? Okay, let's go through this one. So here, tax withheld is going to be how much? 1 million. Balance the balance 110,000 relates to the, so remember the balance 330,000 relates to the employee employee aspect of the deal. Proving that all foreign employees have paid their all foreign employees have paid their so as long as the foreign employees pay their taxes, it's okay. Okay, the 30,000 can be claimed back. The balance RM 100,000 can be used for section 110 set off. Tax payable is how much? 300,000 times 24%. 72,000. Does that make sense? I think it's about 28,000. Are we okay this part? Clear? Any questions there? Right, you can follow this part. Okay, now moving on. A local bank in Malaysia pays interest to a non-resident. Local company pays interest to local subsidiary of foreign bank, and also a foreign bank branch of a foreign bank. Okay, basically you got a few transactions here. We got one bank, local bank, pays a non-resident. Okay, hold on a second. Pays a non-resident. Are we okay in this part? Local bank pays a non-resident. Here also non-resident. So you got two non-residents. You got non-resident one. Local pays interest to a non-resident, okay, and I think that's all they did. They didn't pay to any. They only paid one. Okay, so I'm just gonna. Okay, so that's the first one. The second one is a local company pays interest to a local company pays interest to local sub pays to foreign branch. Okay, now in this case, this one this is not subject to withholding tax. Why? Well, local bank is going to be not subject to, as the payment by local bank is still local. This will mean that there is no need to make any payment for withholding tax. Got it? This one? Foreign branch. Well, what's your withholding tax? Interest is how much? 15%. Are you okay in this part? Follow? Okay. That cover this part. Okay, let's go to the next part. Okay, I'm going to give you this question. I want you to try this question out. Okay, try 1, 2, 3, 4, 5 question and determine whether there is a withholding tax requirement for each one. I'm going to give you about 10 minutes. Is that okay? Okay. Okay, take 10 minutes to figure this out. There are two minutes per each question. So I just want you to write down your answer first. Can you do that, guys? Okay, I gave you a few questions on withholding tax. These are the rules for withholding tax. Now you decide whether got withholding tax for this one. Okay? Right. I'm going to give you a timer here. Okay, try this out now, guys. Done already, guys? Okay, okay. Think. You can use your GPT if you want to. You can use Gemini. I don't know whether you have Gemini. You can use the PwC GPT. Try all the GPT you have. Claude lah, Gemini lah, Notebook LM lah. Got quite a number of assistant for you, right? At work you use AI, correct? Then why don't you use it here? You do the same way you use at work. That is, you decide whether or not there is it's correct or not. You check and see. I know you cannot use AI in the exam. That's the sad part. Yes, you can't use it. So that's the sad part there. But by the way, guys, book your exam for the June already, not because you know lah, it runs out of space very fast. Did you all get space in KL? Great. Okay. Mecca, have you booked already? Mecca, have you booked your place in KL? Are you going for exam, Mecca? Yes, huh? You answer first. You double check your answer with AI. So AI check you, not you check AI. Huh? Then I will verify. Then you see 3-party verification. Your brain, AI brain, and then my brain. Alright?